Sanjiv Bhasin also joining us on the show. Mr. Bhasin, let's start from where Sharad left off. The update that we've got in terms of Ultratech cement for the quarter gone by, and it seems like it's a decent number. There's a 5% year-on-year growth, quarter-on-quarter 2%. What do you make of it? Because there has been a bit of a traction in cement stocks for the last couple of days.
Anisha, that will be part and course of the construction activity. As you are aware, in NCR and Delhi, because of the strong fog and cold, there has been a little bit of the state government has come out against construction activity and so on. So dispatches and consumption will be postponed for about a week or so. But I would use this as a buying opportunity in the sense that Ultratech and the five players, they control 53% of the entire market. At 138 million tons, even if a 10 rupee increase comes, you can imagine what the variables will be. And I think by first week of January, you will definitely see some price rise coming in cement. So it's a matter of time as the weather gets a little more moderate. I think construction activity, which has been at the best, will see more traction. You're seeing the same in infrastructure, in hydrocarbons, in real estate, and the demand let up in road construction. All that means cement and steel are a natural conduit for that. As a disclosure, Ultratech is one of our top holdings. We are very, very optimistic. And even though now there is not that much of room of comfort on the price, we still think earnings will be in line. So buy on declines would be the call for Ultratech, Ambuja, and Dalmia Cement.
Okay, fair enough. What about your strategy, Sanjeev, when it comes to the entire auto sales numbers? While it has been a bit of a mixed bag, it has been slightly on the softer side this time around. How have you read into the auto sales numbers?
Yes, Avan, and that is what we have been foreseeing. So we have actually booked a lot of profit across the board in some of our top holdings. We continue to be overweight Ashok Leyland. Ashok Leyland, and if you recall from 160, 165, 170, Ashok Leyland will be the biggest beneficiaries of more CV sales. They are eating into the market share of Tata Motor. Their bus market is doing roaring business. Anything to do with electric vehicles, the bus side is seeing the maximum amount of traction. I can even state that Ashok Leyland is headed to 250 on a price performance. But the business is doing extremely well. They are in all their verticals doing, seeing the best traction ever. So Ashok Leyland continues to be a top pick. You can also add one of the OEMs which we think is going to do well is Motherson Sumi. We had a buy close to 65 on this. It has just started to see traction. But on the large caps, be watchful, particularly the two-wheelers and M&M. That is where you should take some money off home.
Okay, so take some money off the table when it comes to select auto names, but the likes of Ashok Leyland, etc., still look very strong. Naresh, I wanted to come to you on the metals pack because this morning Jefferies has actually written a note, and across the board there have been upgrades that came by. For JSW Steel, for instance, they've upgraded it to a hold. The target price is now 800 rupees. Coal India, the target price has been hiked to 450. Hindalco, etc. as well. And they say that they're cautiously optimistic on the sector given the volume growth that they're envisaging. But on the charts, what would you do with the metals basket right now, Naresh?
So metals is a tough trade right now because what we are seeing is we've already seen a rally and it was a little unexpected in some of these names like SAIL, Nalco, etc. Hindalco looked positive and has made a good move. So a lot of these names are already up 20 to 35%. So at current levels, risk reward is not good. So it would be a time to wait for a dip because it's a high beta sector. It tends to dip also in between. But at the same time, the mining space has been showing much better strength for the last many months. So if you look at the trends, they've been much clearer in a NMDC, GMDC, OMDC, etc. Even a Coal India, which is more on the mining side. So that would be the focus on dips. I would prefer going into mining names. So would wait out for a dip at current levels. It's a hold, not a buy in any of these names. One can look at the mid cap, small cap, specialty steel side of it, wherein we are seeing good breakouts in a Kalyani Steel, etc. But at current levels, the large cap metal names, the risk reward is not good. I think if I have to take a bet, only Jindal Steel still fits in because it's not made a fresh move after the new high.
That's the view coming in. Meantime, let's also get in a take then on some of those stocks that really were in the spotlight in yesterday's trading day. And the heavyweights had really dragged ITC, Reliance Industries. You also had an HDFC Bank that took a bit of a backseat. Kunal, what are the charts reading?
Well, they're still, so for example, for HDFC Bank, it's still on a bullish tone for the stock. I think it's shown a very good recovery of more than 14-15% from the October lows for itself, when the stock was at 1500 levels or slightly below those levels, towards a point when the stock had crossed the 1700 mark a couple of days back. So in the last 3 or 4 days, there has been a mild bit of correction for HDFC Bank, but then when we look at this in the context of the last 3 months of the price trends, it's still on the bullish side for the stock. So we'll have to wait out for a point where the stock breaks below the immediate support, and I think the immediate support for HDFC Bank, which we flagged of you yesterday, was around 1675 for the stock. So at least another 20-25 points further is where I would believe that the first test of a strong support could happen for HDFC Bank. ICICI Bank, on the other hand, has been an underperformer. So I think the stock has been closer to this 1000 mark for the last many days. Even though yesterday in the first half we saw the stock showing signs of recovery, but we need to see those signs of strong outperformance for the stock, especially in times when the market fares up pretty well for itself. We've not seen that positive relative strength from ICICI Bank so far. So I think that's the only data point which I'll be waiting out for. But I think at current levels of 1000, it could also be a good contra buy for traders who are looking at such a kind of a behavioral trade.
Mr. Bhasin, I know we discussed the hospitality sector and you talked about Indian Hotels being one of your, preferred bets there. But Motilal Oswal is calling Lemon Tree the top pick for 2024. They've hiked the target price on that one. They're saying the stock has been scaling new heights and it's reignition of the convention centers, which is going to boost the growth trajectory. So they're not only depending on the leisure travel, but also the business travel and the kind of, conferences, etc. that's happening. What's your view specifically on Lemon Tree?
Yeah, so Anisha, we had a buy closer to 50 rupees and we've actually booked out of that. We want to stay with large caps. Like I said, Indian Hotel is in our portfolio, and as a conduit, ITC Hotels has 7,500 rooms franchise, and that is 10% of their entire business. So if you want to play the FMCG basket, the cigarette basket and hotels, then it's better to be in a stock like ITC. Also, Anisha, I'd like to put on record, 25th October was when my birthday was. You asked for a gift and I told you Diwali, and my birthday gift was Vodafone, 10.5, 11, as it 18.5. Yes, 75% in 2 months and rocking. So that is what undertone remains, that some of the stocks have given you huge return, but also be a little cautious because now the markets are, the final run of a bull market is always very, very pleasing, but very, very painful in the end. So learn to take some money off the table and stay invested in the best of blue chips. So Indian Hotel and ITC is where we play the hotel side. And if you have been following ET now and me, then take some money off Vodafone now.
Sab, are we in for a bit of a slow patch for autos, largely because run-up has been strong? B, let's be clear, the seasonality effect will kick in, whether it is December or Jan. And typically, I've always seen that, when you have one good year, the next year is not that great, at least for autos. I mean, it's always a cycle which is at play.
Correct. I'm very much in tune with you, and I think we know the December and January effect. And if you heard Mr. Srivastava, he's telling you that they've never seen this type of numbers. So you cannot have a constant growth as we have witnessed in this year. I think the next year will be more moderate. You have just a statement of account on the budget. There will be other impediments, but the growth rate remains strong. However, like you said, Nikunj, stocks are priced above perfection. So there is no room for disappointment on monthly sales or quarterly sales. Even despite that, Maruti's again raised prices. So even though, metals have not done that much of a input cost, their optimism is seeing price rises, which is what scares me. If DLF is launching new projects on Sona Road at 18,000, now these are crossing the affordable limits. Same is the case with a large part of the autos. They are actually pricing themselves to perfection, and any slowdown in demand can, gradually see inventory build up. So yes, very, very cautious on both real estate and autos.
Cautious on real estate. I just want to get it right. You said cautious on real estate.
Yes, I have interacted. I've done the footfalls this time, and I see that the stock prices leave no room for comfort because now the pricing is going beyond the common man's reach. You know, it's the end use user. The end use user is already bought footfully. Now it's the speculation because of the wealth effect of gold and stocks, which is seeing this type of driving. And particularly, like I said, if the new launches which I saw DLF at 18,000 square feet at DLF at Sona Road, it is far above the common reach. Any misstep in any micro development will again see these inventory levels not last. So be cautious there. Take some money off the table.
ये क्या है? Four things you should sell. You have a reputation of being an evergreen bull. Book profits, real estate is not looking good. ये तो क्या हो गया जी? ईयर चेंज हो गया तो व्यू थोड़ी बदलता है वतीन साहब. You have a reputation of being an evergreen bull. देवेन भाई भी ऐसे हैं, देखो वो तो हमेशा ही बुलिश रहते हैं. रिलायंस और इडानी की तो बात ही नहीं करी मैंने. या वसीम साहब.
निकुंज जी, हमने पैसा भी तो बनाना है और पैसा वो है जो घर लेके जाओ. समझ आई ना? अभी आपको थोड़ा बहुत अपने आप को टोन डाउन करना चाहिए. The market is making money every day. I am very happy. I am a broker, and brokerages will do well. As a disclosure, we think that brokerages, insurance, exchanges, depositories, these are going to be the AMCs. These are going to rule the roost. So there are enough ideas. All I'm saying is be cautious of some of the valuation outstretch. And when you get these big brokerage calls of absurd returns, I have a simple view, having worked so many years with FIs and others. When fools sell, you should be buying. When fools buy, you should be selling. Right now, if I have comfort, it is in some of the PSU oil marketing companies, some of the pharma names. And if you want, I can suggest two names which I think can outperform from here.
हाँ जी, नाम बताइए. नेक काम में दूरी, नेक काम में क्या देरी?
So BPCL and IOC, HPCL are going to be the darlings for this year. Already HP, IOC have taken your breath with the move. I think BPCL is just poised to do that. Given that 8,500 crore was their profit after tax, EBITDA margin was at the highest. Refining margins will do well, but I would say BPCL is the dark horse from here to the budget. It can see a 20% move, and BPCL, even though it is all the distillate businesses with it, has underperformed actually the performance of HP and IOC. BPCL is something I'd put my money. The second is Lupin. Now, as a disclosure, Lupin has been in my portfolio for 8 years. It has underperformed miserably. It is just coming back now. But their generic pricing, their new launches are doing exceedingly well. And at 1,300, if I can buy one large cap blue chip, it will be Lupin. So I think 1,500, 1,550 on Lupin is very much on the card, and 550 on BPCL. These are two stocks which I can even buy at this price and be comfortable.
Lupin and BPCL, those are the top two recommendations coming in from Mr. Bhasin. On that note, we'll let you go, but let's take the conversation